Hi, good afternoon. This is John Harrington, co-founder of Significant Trading, and also creator of the Significant Trading Wealth Infusion Stress-Free Way to create an extra stream of income in the stock market. So this afternoon, we are here again to talk about what has happened in the stock market, and wow, what a week it was. So I'm just going to uh, go to our normal link. There we go. All right, fine. And here we are. And we have, again, I start today with the NASDAQ, but yeah, what a week it was. Just hello again. And since we have the screen up, thank you for joining. And I'm sure just as me, you are very intrigued in what is happening in the stock market, especially if you see um, an incredible Friday uh, uh, rise of incredible amount of points, nearly 1,000 points, 863, I think it was, points. The stock market, the Dow rose, and you ask yourself on what? Just to say before we continue, whatever shares I talk about here, it's not a recommendation to buy. I don't give any recommendations. I'm not a financial advisor, and I'm just talking to you about what is happening in the stock market. And since I have, as I said, created the strategy to trade in the stock markets stress-free, it may be also your your cue to become a bit more interested. I had a question this week from somebody and asked, he's very interested, how difficult is it to get into trading? You know what? I think it's pretty much like driving a car. One day you decided that you wanted to learn to drive a car, but you understood that you couldn't just get behind the wheel and then off you went. You had to actually go for lessons and then understand how all the tools work that they are given, like a steering wheel, an accelerator, and a brake, and all those type of things, and then the rules of the road, and then you were allowed, after you've passed the test, allowed to go and drive with other people quite successfully and making a life out of it. And this is the same with trading. Some people look at it and think it's way too complicated. It's only complicated because you don't know. So for years, my wife and I have spent and invested a lot of time in ourselves and also in studying all of these. And so now we offer you just an opportunity to short circuit a lot of years. And if you become part of our community and or get into understanding what this whole strategy is, then you can also create a second income stream for you. And just as a reminder, we have taken the time and we have put all our experience into a book, Stress-Free Share Trading for Beginners. It will soon launch in the next few weeks. You can register your interest on our Facebook page as well as our web page. You just go there and click on the Learn More button, and we can send you a free copy of the ebook when it is launched. That will last for about 3 days, after which you will have to buy. So if you want a free copy, please go to www.significant-trading.com and click the Learn More button, and then you can register for your free copy. All right, so back into the stock market. The Dow Jones this week went up 6.81%. For year to date, it's only down 5% at the moment. So let us just go to the Dow Jones and industrial average. Here we are. And we see we're getting to previous highs. It actually jumped on Friday. Amazing how this happened. We'll talk a little bit more about that, just to show you also the S&P 500. The same is nearly at all-time highs again. Also jumped a little bit on Friday there, gapped, and is now at 3,193. And then also, as I just had the NASDAQ composite on there. And basically, if you look at where it was on the 19th of February, the high point, it closed at 9817, and it has now closed at 9814. So pretty much on the spot there. We see that the S&P has increased this week nearly 5%, 4.91%. It's still down 1.14% on the year to date, and the Nasdaq is, as I say, currently at 9,814, and it's up 3.42%. And for the year, the Nasdaq is up 9.38%. So, because I always use gold as well, if we go to our gold thing. So what we see, the gold has closed at 1688, below the 1700 mark, $1,700 per fine ounce. Last week it was at 1751. It came down 3.6% this week. It is still up 10% for the year, up from 1535, where it was on the 31st of December. So if we see now here, the gold line is, let me just get a line in here, and we can see that, let me get a better color. And a little bit, there we go. All right, so we can see that gold has is hitting a support base here. It has hit it now 1, 2, 3. It's the fourth time it's come down to this support level. We'll see if it keeps holding. If it doesn't, it may come down again, perhaps down to the 1600 level. As I always said, as long as gold is above the 1600 level, then all gold mines will make a lot of money. So it is not a bad holding to have, or to think about, even in ETF ways, that if you have a gold miner ETF like GDX or GDXJ, which is the junior miners, they are all good ones perhaps to have. So let us see what has happened. If we go back, it's just amazing. So the market jumped, going back to the Dow Jones chart there, the market went back, or reported, they were basically expecting in America a 20% unemployment rate. So then when the figures were released, it came through as 13%. 13% unemployment rate. And that excited the market no end, and it jumped nearly 900 points. As I said, 863 or something like that points it jumped. Now, put that into perspective. I always ask the question, what has happened and why? And So if you look last year, the S&P, let us put the S&P up here. Last year, the S&P this time was at 2826. 2826, way down. 28. Just draw a line on that one. Round about in that vicinity. That's where it was. And the unemployment rate was only 3.5%. Now this 13% which was reported is also maybe not quite true. There's a correction that they will have to work in there, which will make it 16%. So you have 1.5 persons out of every 10 unemployed in America currently. And the market is absolutely, you know, dancing for joy. It is so unreal. Last year, when the unemployment rate was 3.5%, it was more of a worry. But no, not now. Look what has happened. It's just jumped. So it's not very believable. I am still very cautious, but it's the market is. I've read articles that say, "Oh, the market knew what is right," and yeah, I think in the end, the market will really find out what is right. But it just reminds me there was a Jewish leader or rabbi by the name of Paul, and he mentioned in a letter that he wrote many years ago. So and he said, about the time everybody's walking around complacently, congratulating each other, we sure got it made. Now we can take it easy. Suddenly everything will fall apart. It just, you know, like that thought just comes to mind. That is a message translation out of First Thessalonians 5:3. But it's just, it just comes to mind. What is happening here? Why is the market having such a ball of a time, and yet the fundamentals is not there? It's like they're just throwing more sand, standing on a cliff. The waves are eating away the cliffside, and they're just throwing in more sand. Perhaps it will last for a while, but we'll see where all this is ending up. Obviously, the pandemic has made a huge difference, and people think that the recovery is going to be quicker than what everybody thought, except the whole problem is that everybody's debt is now much higher than what it was, and since they are printing more dollars, more euros, more everything, that obviously also erodes its value. So that is just where the markets are at the moment. And if I just come to our normal criteria that I look at is the VIX index is down to 24.52. Wow, we haven't seen it that low for a long time. Last week it was 27, and the CNN fear and greed, where for the last few weeks, I think about 3 weeks, it was around about the 50s, quite neutral. It has now jumped into the greed criteria, and it's now at 66. Wow. So people are really feasting, and the party is going, but I am not sure. So I am not negative because I have I've put money aside, and I'm ready either to short or to take new opportunities. We'll talk about new opportunities as well. And so, yeah, since we are on new opportunities, I just want to say what I can see in the market. I'm not the don't give myself out as the wisest guru out there, but when things are happening contrary to the fundamentals, it just need to ask why, and then see if there are any answers. So let us see. Okay, so there's a lot of upbeat at the moment. So let us see what has happened and what we are looking at for next week. So it's quite interesting that in the metal fabricating industry, there's quite a lot of good news, and the companies are responding well. And also it's the basic material sector. And so I'll just look at a few quickly, just to show you what I have looked at and sort of on my watch list. Here's one, the Fastenal company. It's one at $42.66. It has broken out of this resistance here. I think one can actually perhaps move this line just up, because that was more consolidation, and so it's now really ticking up. It's also higher on volume, and so that is one that we have put on our market. I also like it. It's under $50 per share, so one can have a look at that. Definitely on the watch list. So the second one is Tenasaris, also a steel making factory, and here we are. You can see there's quite a big breakout on this one, and from the resistance that it had, and it has now broken out of that. I would love to see if it is going to test that support again, but otherwise this is one that most probably can run up to around about anything from 20. So that gives you a 25% uplift, but it can go right up to 24, which will be more like a 50% plus uplift. So that is something to look at. If the party is continuing like it is at the moment in the market, then this is definitely something to keep an eye on. And the next one is, sorry, it's not MLS, it's MLI. So here we go, Mueller Industries on the New York Stock Exchange. Again, yeah, we have had a, so this one, where, yeah, we can see right where the price is at the moment. We have had it tested as a resistance way back here in March. This come again, and it's now tested again, and it has broke through. We'll see if that holds. Just paid a dividend as well. Let's see how much it was, 10 cents per share. All right, so here we go. Not too bad. So that's one to look at as well. And then another one, a little bit more pricey. Mueller, we can see is 28.55. Tenaris is was 15.14, and then we have the next one, RBC Bearings Incorporated on the Nasdaq. Quite a big jump out there. As I say, these are all in the metal manufacturing industry, basic materials. So it looks like construction is happening. They're all making steel products of various sizes and shapes. This one has jumped. We see it is now testing the next level, which was quite a strong level. and we'll see. I would love to really actually breaking that level, the 155, testing it, and then before it goes up, it can go up right to the $200 level if current situation is continuing. So this is what we are looking at for stocks that I've identified to look at for the coming week. And so that is all doing well. In the meantime, what I've done personally, I still hold onto gold. That is fine. I am quite happy with the gold as long as it's above the 1600 level at the moment, for the moment. And also, when I do trade some of these on the that I put on the watch list, I just use smaller positions, as I am not 100% sure about where the market is at the moment. I'm still just checking it out. Again, just to say, we're still in a election year, although we don't hear too much about it at this point in time, but we'll soon start to hear more and more about that. Just to say, I talk about the watch lists all the time, and just to give you 5 points of why a watch list is so important. First, it saves you time. If you spend one day, like I do on a Sunday, just look at, I have 4 that I've put on the watch list. I have a few more others as well, but there are 4 on the watch list. So in this week that come, I know these are already set up. I don't have to go through thousands of other stocks. I can concentrate on these. So it keeps me focused. That's the second point. It keeps me focused. I have an industry. I've identified this industry, and I can see that there are more than just one stock and company in this industry, and they all progressing in the same direction. So that gives me assurance, but also keeps me focused. It, as I said, third one, it points me to an industry that is well positioned in the market for that time. It helps to keep track of markets is the fourth point. So I know if it's going up, going down, if there's going sideways. So it helps to keep track of the markets, and it just verifies your stock picking ability, and it allows tracking. So when you put it down on a list, you know what you are looking at, and you can keep track of those. And so as I said, this is not, I'm just using a bit of a fundamental here with the support and resistance lines. It's something I look at, but I don't, that's not my entry and exit points for my strategy, but this is something to look at. It just allows you to track if it has broken out of resistance, if it has broken support, and if it has come back to test it. It just gives you more assurance about what you're about in the market, and that is what it's all about. It doesn't take long. It takes you maybe an hour or 2 at the most, once a week, and then through the week you can just look at these things and keep track of it. So it saves you time, keeps you focused, it helps you with your selection of industry, and keeps you targeted, help to keep track of the markets, and it verifies your stock picking ability, and it allows tracking. That is why you need a watch list. It will just help you so much in having stock list. So anyway, this is me for this week, and let us see where we are going. I mean, especially interesting to see if the greed figure is rising, because that is sometimes a bit of an ominous sign. But let us see where all of this is going to. As we can see, there's still loads of opportunity in the markets, and I'm positioned to with cash in hand. To if it goes up, I can get in. If it goes down, I can also get in. And so that's what I say. Be wise, and see you next week, where we will see what is happening in the market again. All right then. Bye-bye.